Welcome to Turning Hard Times into Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City. This is the 22nd day of August 2017. I do like to remind you, I'm the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks. You can sign up for that letter. Go to miningstocks.com, miningstocks.com. It is a very exciting time for the junior sector, no doubt about it. Novo Resources being one example, but there are many more that we'll be talking to you about in the weeks to come. Also, like to encourage you to continue sending along your questions, comments, criticisms, and praises to questionsfortaylor@gmail.com. We want to thank our sponsors for making this show economically viable. This week, our sponsors are New Range Gold, RN Resources, Novo Resources, Genesis Metals, Fireweed Zinc, and Osprey Gold Development. I've titled today's show, Can China Impact the Fraudulent London Paper Gold Markets? Ronan Manley and Robert Carrington visit for the first time. Michael Oliver returns and will be with me momentarily. Well, as the Gold Antitrust Action Committee has proven, the manipulation of the gold price is no longer theory, it is fact. At least in the short term, big banks use the futures markets to deny price discovery for gold bullion, choosing instead to create a virtual market of gold that has little to do with the gold bullion markets. Gold, the metal given to us by God to be used in commerce, is not permitted to get in the way of robber baron bankers who choose to spit in God's face and create their own counterfeit money that they use to rob those who actually produce wealth, like the miners, manufacturers, farmers, and inventors. And the bankers then move that wealth into their own pockets, which they use not only for their opulent lifestyle, but to control the body politic. And even as Alan Greenspan admitted in 1966 in his article, Gold and Economic Freedom. But the truth about the bankers' counterfeit money must be hidden from the masses if the elitist con game and rotten Washington establishment is to continue in power. Yet no matter how much government and those in control seek to hide the truth, there will always be those who dig beneath the surface to find it. One such seeker of truth is research analyst and former Morgan Stanley employee Ronan Manley. And as I said, he'll be with me in just a bit, actually, the second half of today's show. Before we say hello to Ronan, I will be also speaking with Robert Carrington, an exploration geologist who heads up New Range Gold Corp. It's a company that has encountered some very high-grade gold intercepts in western Nevada. It is a story I think is well worth paying attention to if you invest in the high-risk, high-return junior gold exploration sector. Well, speaking of the truth, I'm really happy to have with me the always truthful Michael Oliver. Thanks for joining me again, Michael.
Hi, Jay. Good to be back.
Always good to have you. Unfortunately, not very much time today, so I want to ask you very quickly to comment on your major call. The last of these major tectonic turns have finally turned, the one that you've been predicting would turn. Now you have a sell on the S&P 500. Your comments, please.
Yeah, I've been watching the stock market in pieces, key sectors, key stocks, and NASDAQ 100, S&P 500. And I wanted to see the S&P 500 do something it hasn't done since it's turned up in early 2016. Now, if you recall and go back and look at a chart from that low to the present, there have been a lot of sell-offs. Some of them pretty sizable, even more sizable than the one we've just seen from 24.90 down to 24.17. Now we're having a sharp rally back up to 24.50. But that drop that we just suffered in the S&P did significant damage, major damage, to long-term momentum factors that did not occur in any of the other sell-offs over the last year and a half. Therefore, it's my view that that sell-off is different qualitatively. It indicates the market is indeed wounded severely. You can have sharp rallies, but I think that the beast is in trouble. And I'm also getting the evidence from key leading stocks like Amazon and Google and so forth. Yes, you'll have fitful rallies. This almost always occurs in a trend change. You get your primary thrust, and then it tries to say, no, I'm not dead, and so forth. But I think a trend change has been signaled. I do have some other levels that would add to my conviction, specifically trade down to 24.05 on the S&P 500 anytime this quarter adds to my conviction that we've topped. Now, the issue then becomes, okay, let's say you've topped, which doesn't preclude rallies, but it doesn't also tell you what's the nature of the decline. Is it going to be an 87 type event, or is it going to be some more arm wrestling type process, which is normal, such as the 2000 top or the 2008 top? The collapse came later in the bear cycle as opposed to early. I'm mixed on that. I'm not sure. But I do think enough damage has been done to where we can now say, okay, U.S. stocks, S&P 500 in particular, is broken, and the bias should now be in a downward zigzag, not an upward zigzag.
All right.
And I think that enhances some of the other shifts we've seen over the last year or so.
Absolutely, and it goes with the other tectonic shifts you've talked about. Michael,
Yes.
with just about a minute left, gold, I know you put out a thing today suggesting, I know you're still very bullish on gold, but you sort of see the shares outperforming the bullion yet, right? With 30 seconds, please.
Yes, they've pulled back since last year's highs in terms of relative performance, but it's really a pullback within an uptrend when you examine the spread chart, meaning that you measure GDX, for example, versus gold, or XAU index, which has a lot of history, versus gold. That thrust we had last year relative where gold miners outperformed gold was a breakout thrust. And yes, they've pulled back in relative performance since then, but they've stabilized over the last 6, 7, 8 months, where that spread really sort of gone to sleep. And but it is in a bull mode, and I think that the next thrust up in gold, and I'm particularly watching the price at 1303 on gold now. If you trade the nearby future at 1303 plus, I think it's going to really power up. I think at that point the gold miners will ignite more so than will gold.